Inflation is hitting people where it hurts. I hear from individuals all over the world telling me about their experiences, and it isn't pretty. The first thing I want to look at is the cold front that's going to engulf the entire United States and other areas. The second thing is the inflation nation. We are seeing the producer prices, the consumer prices all rising today, and I will show you more information surrounding that. And the third thing is the oil reserves. What's happening with oil prices, the reserves, and all sorts of different information. I'll try to jam it all in. Let's begin. Okay, so let's begin here. DC suffers the coldest start to November in a decade, violent Arctic plunge to engulf the entire United States, plus the link between sunspots and the weather. This is the coldest first week of November since 2012. So just to give you an idea of where we are historically, and then they had a few points that I think are really, really interesting. Violent Arctic plunge to engulf the entire United States. A severe blast of polar cold is preparing to drop anomalously far south and engulf the entire United States from coast to coast. I don't consider the above title hyperbole. If the forecast plays out, this will prove historic. And that's big, of course. Pockets of cold expected as we approach the weekend, particularly for the central regions. And then it goes on, okay? This is important. Real important, because food prices are already rising considerably. And what's going to happen here after this? Is it going to, really allow the frost to take hold on some of these crops and potentially ruin them? Here you can see the map, just giving you an idea of what's happening. Nobody knows until after the fact. A word of caution, though, this forecast is still in the unreliable time frame. The models could easily shift, okay? So that's all for this, but it's not the only place. Exceptional cold wave engulfs 90% of China. Beijing sees snow 23 days earlier than usual. North Africa suffers rare November flurries, plus the continent spanning polar cold sweeps Australia. All over the world, cold too early at a time we are using so much energy. The demand is up, the prices are up, it's hard to come by. And what do you think this is going to do to your food and energy prices? I think it's pretty obvious, okay? This is not a good sign at this time. And just to go back to this, you as an individual, you shouldn't just be a bystander. You should do what you can today. Number one, that means being prepared on the food front, having that ready to go. Also, at the same time, many people are getting their power provider to sign into a deal to lock in those prices. Today, you got to do your own due diligence on that to see if it makes sense for you. American households are carrying record amounts of debt as home and auto prices surge. You're looking at this, an increase of 1.9%. It's just a small percentage when you look at, but think about it, $286 billion for the second quarter of the year. What are people doing right now today? They don't have that stimulus that they did previously. And so what do? Go to the credit cards, go to the different types of debt available to them. Mortgages, which are the largest component of household debt, it increased yet again, $10 trillion of debt. A rib roast can set you back $100 as meatflation hit shoppers. I do believe this is referencing Canada, just to show you it's all over the world. Thanksgiving dinner staples are low in stock thanks to supply chain issues. Turkeys, yams, and pies are in low supply, though aluminum foil to cover it will be easier to find than last year. Okay, they're just showing you here the 20 items. They usually make a basket of it and try to price that throughout year after year. And supplies of food and household items are 11% lower than normal as of October 31st. This is all dependent, of course, on what you eat, what you consume, but it does affect you regardless. Okay, this is so key, so important, and yet it is really not understood by the majority of people. We need to be aware of the data, why it's happening. Let's break it down in the Money GPS Insights. Weather will play an increasingly important role in the next little while when it relates to food and energy prices. There's no doubt about it. Global debt load will rise as the consumers face additional pressures right now at this time when stimulus is fading. As a result of this, unrest will become an issue. Could that be offset by additional stimulus measures? We haven't seen that yet, but we'll see what happens in the near future. Take a look at this. Americans blow off Fed propaganda. Inflation is temporary. We've heard that before. Transitory, it's temporary. Oh, you're not seeing anything. Don't worry about it till, well, it's worse than we thought it was going to be, and it's here to stay. Consumer inflation expectations for 1 year and 3 years, 1 year being the red line, and you could see spiking quite high there, probably about 5.7% or so. And the 3 years, it is showing us 4.2%. Okay, those are the official statistics. It's not really what an individual is going to have to pay, but all you need to know is that this actually highlights the fact that the consumers are feeling it, meaning they're seeing it at the store. It's not a CPI number or a U3 unemployment rate. This is the real stuff that people are seeing. And what's going on here? You've got the Federal Reserve saying, don't worry about it, everything's going to be okay. To the Bank of England on the other side saying, we're sorry for rising costs of living. I mean, it's the complete opposite. The departure here from this type of information is central bank nonsense. But, quote, Andrew Bailey, I'm very sorry that this is happening. None of us wants to see that happen, saying the rising prices, of course. And they just show you here the same kind of thing, the inflation expectations. But always, you could see how, okay, it's bad now, it's going to get worse, and then it's going to come back down, so don't worry about it. That's kind of what all of the governments, all the central banks love to say. That isn't necessarily the case, though, as we have seen historically. Let me know in the comments section. Do you think we are about to be engulfed in more inflation, or will it subside and perhaps even go into a deflation? Put it down in the comments below. I know everybody's got a difference of opinion, and we need to share that because right now we're seeing inflation. There's no doubt. But what happens in this next little while? Inflation at the wholesale level rose 8.6% last month from a year earlier, and that was matching September's record annual gain, offering more evidence that inflationary pressures are not yet easing. How could they? How could they when everything seems to be getting worse? They talk about the raw materials, the traffic at the ports, the freight yards, and so on. But many different companies, CEOs of this company, whether it's the semiconductors, look at the SOX index, okay? Just see what has been happening there. And then you look at all the different, any sort of manufacturing company that's making stuff that requires parts from different places, they are feeling it. What about Bitcoin on the other side of that? It just zoomed all the way up to approximately 68,000, okay? Beyond 68,000, in fact. And I'm looking at this in 4 different time frames, and now it has come down. I highlighted this specifically, showed you Tesla, showed you the broad indexes right here. All 4 broad indexes in the US. I showed you Bitcoin. I said these things are all overbought on all of the different indicators. I highlighted it. I think I was highlighting this in my daily videos, but for sure I highlighted it and spent some time in it in my live videos on the weekend, showing you these things are looking way too hot and need a breather. They are in need of a breather. All of these things, of course, the trajectory and the push is certainly in an upward direction, but you can't see things go up forever and ever. And right now we're getting that breather, at least a small one. We'll see what happens in the near future. Okay, take a look. You're looking at the final demand, less food and energy year over year. That's the blue line, 6.8. And then the final demand year over year, the PPI, by the way, and that's just showing you 8.6. So regardless, it's bad. It's bad whether you put the food and energy in there and the statistic itself is manipulated. I have heard from you and I appreciate that so much. And I know others do too. That's why I love the comment section and the live as well, because people can hear the actual data. Oh, I've been buying this particular product for 20 years at the same store and I've watched that price go up and up and up and up. The dollars are being devalued into nothing. That's what's happening. We are walking ourselves over the cliff today if we keep that money in cash, especially. This is the oil price, currently WTI crude at $84. The spread in between WTI and Brent is very narrow, less than $1. Just to give you an idea of what's happening. Sometimes that spreads $10. Right now, it's less than $1. Okay, and you're looking at natural gas around $5. So that is something that has been, if I could pull that up, if it will allow me to, of course not. This has been on a tear. Natural gas has been an absolute tear over the last while. It's always in flux, but that's over the last 3 months. That's over the last year. It's going up and up, okay? But importantly, what's going on with the strategic oil reserves, the petroleum reserves? Are they going to, unleash that? Well, this is from John Kemp, Reuters. He puts out incredible data through Reuters. And basically, they just get to the scenarios for using the strategic petroleum reserve. Extreme weather events, maybe it's a big hurricane, they can, use some of that and so on. They just get into all these different things. At the very bottom, not useful. It's offsetting OPEC's production policy in the medium or long term. SPR is a stock, production policy is a flow. You see, it's not a disruption. Tomorrow the oil stops flowing. Okay, now we need to use that oil. This is a different scenario. So do not expect this to be the case, at least not in the near future. So those oil prices can stay elevated. We've been around this range of that 80 to 85 for a little while, but come on, it's been going up. It's been crazy, okay? If you've been noticing the gas prices rising, don't forget to hit that thumbs up in the same direction of your gas prices, all right? US taxpayers bankrolled General Electric. Then it moved its workforce overseas. Wait a second, hold on. You're telling me that a company got billions and billions of dollars and then they moved overseas? Could it be? No, they wouldn't do that. Oh, of course they would. How many different companies have done this? They got the bailouts or they're getting, tax incentives. They're getting every different reason to get money from you, the taxpayer. And then they put their production overseas. This is what big government does. They turn everything into garbage if they get their hands on it. Big mistakes, big problems. Message of the day right now is to be prepared. If it's not the cold, it's the central banks. If it's not, weather, if it's not what's happening right in front of us today, it's something tomorrow. We are never prepared enough. People need to be prepared today. There are basic steps that you can take both with your portfolio and with what you do in your daily lives. I talked about a couple at the beginning of this one. If you haven't seen it already, I have a playlist called How To and Solutions. Have you seen that? That has some really good stuff. How To and Solutions. It's a playlist. It's available. If you go to the main channel, the Money GPS, you scroll down, you're going to see that there. And I've got tons of stuff for you to check out. All right. If you haven't already, hit that thumbs up to support the channel. If you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.